just to be clear, I'm really talking about disinflation rather than deflation. We could have deflation. That's when prices drop. But what I was, and so I'm not ruling that out, but what I was expecting is disinflation, meaning we'll still have some inflation, but it'll get lower. So it'll go from, I think the last monthly report year over year was about, it was well over 5%, but it was the highest in 30 years. So that's kind of very hot inflation. But I would see that trending down in the coming months to, 4%, 3%, kind of get back down to that, good old 1.6% where we were stuck for years during the period from 2009 to 2019. So you still have a little bit of inflation, but it's disinflation in the sense that the rate of inflation is lower than it was before. So inflation coming down, put it that way. And one of the best guys investing and financial analysis I've ever found is that the Fed, because they're always wrong, whatever they do, if you do the opposite or assume the opposite, you'll be it's a good starting place for your analysis. You got to do a little more work than that, but it's a good starting place. So I was about 4 or 5 months ago, I was very uncomfortable because my view is that the inflation we were seeing was temporary, transitory, if you want to use that word, that it would be coming down, we would get into disinflation. And I found myself in agreement with the Fed, and that made me really uncomfortable. They're always wrong. Maybe I'm wrong, but so I was happy the other day when they threw transitory overboard and said it got on the inflation bandwagon. I said, okay, well now I feel more relaxed because I'm disagreeing with them, and that's a good place to be. So, yes, they did get rid of that. I think, let's bear in mind, we just went through Jay Powell's reappointment, announcement, and he's going to have a Senate confirmation hearing, and there's a political aspect to this. And so he didn't want to be on the wrong side of that politically. Whether I'm not saying there was some behind the scenes deal with the White House, it's not possible, but we don't have to assume that. I think it was just Jay Powell, the Washington politician, as much as the central banker, saying, okay, I'm getting beaten up over this, let's just take that off the table. The stronger inflation that we saw in March, April, May, June, and basically through most of the summer, a lot of that were what are called base effects, meaning, so how do we actually report inflation in the United States? Well, we do it on a monthly basis, but it's year over year annualized. So take the month of May or the month of June, the month of July, 2021, compare it to May, June, July, 2020, and take that year over year increase and then annualize it kind of, times 12 if you want, a little more to it than that. And that's your inflation rate. Well, what was going on in 2020? It's the lockdown. It was COVID. The U.S. economy was flat on its back. So of course you had price decline. So when you get a year down the road to 2021, you would expect those prices to be higher, not because everything's out of control, but because the prior year was so weak. And if you're doing it year over year, which is how they do it, you're going to get some pretty hot numbers, and we did. So that was to be expected and not cause for concern. The real crunch came more recently in September, October, and now I think we'll be getting the November numbers in a matter of days. And the third quarter, 2020 third quarter, was one of the strongest quarters. We had a steep drop, and then we had the bounce back in the third quarter, one of the strongest quarters in U.S. economic history. So the base effect went away, and now you really are looking at something that's maybe a more legitimate comparison. And it was still a little hot. So then you're like, well, okay, is that COVID? Is that supply chain? Because supply chain was not as big a factor. Maybe the supply chain was breaking down a year ago, but nobody was buying anything because nobody went outside. Now all of a sudden the shoppers are back, and we're finding bare shelves again. It's not just the paper goods aisle at Costco. It's one of our big box stores. It's everything. And sad to say, liquor stores don't have all your favorite wines. So we're seeing supply chain effects, and that would tend to make prices go up because we have a lot of money in the economy and shortage of supply. People are going to bid up prices, and then there's labor shortage, et cetera. So there are a number of factors in play, but then you still begs the question: is it transitory, notwithstanding those factors? Because you only get COVID once, so you only get supply chain breakdown once, then it just becomes the steady state, or is it is something going to change? Now that's a big debate. There are two sides to it. I still lean to the view that that the disinflation is going to get the upper hand. And part of the reason I say that is real incomes are not going up that much. This new COVID variant that's going around, I don't have to tell Australians about lockdowns, but we have our own, and that's bound to slow the economy. The supply chain is bound to slow the economy. So if prices get too high in that world, you could actually tip into a recession. So, $4.50 is US dollars. I know everyone in the world thinks we have cheap prices, but a year ago, Americans were paying $2.25 a gallon for gas, and today we're paying over $4 a gallon for gas. Well, okay, fill up your tank, but that's less money for everything else, dining out, movies, clothes, whatever else you want to buy. So it hurts all those discretionary, consumer discretionary categories if more money is going into the gas tank. So you could have a setup for actual, certainly disinflation. I don't have to go so far as to say deflation, but disinflation, meaning inflation is transitory. And if it gets worse than that, you could even see a recession. Now, not right now, and I'm not making a hard and fast forecast, but you can see that trend. Now, I can take off my deflation hat, put on my inflation hat, and just look at the money supply, look at the government spending, look at the supply chain constraints and say, well, wait a second. If the government's spending, trillions upon trillions in deficit spending, which we are, and there are more bills, more legislation in the pipeline, which it'll get amended in some ways. It's not final yet, but it'll probably go through with another $2 trillion of spending. That much spending in an economy where with declining labor force participation, supply chain bottlenecks, a new brand of COVID going around, what does that do to prices? Well, that might give you an inflationary boost. So the best answer is there are good arguments both ways. I don't want to sound wimpy about it, but I don't want to put a stake in the ground either. I lean to the transitory camp. I lean to the disinflationary camp. I think part of what Jay Powell's doing is for political consumption, but we'll just have to see. But again, it goes back to what we talked about at the beginning of the interview: the power of diversification. If you have that diversified portfolio, it doesn't mean that every asset class screams in every state of the world, but some of them will, and they should give you good total returns without too much risk. I would say indefinitely. Again, everything changes in time, but when people talk about the price of gold, and I'll just use US dollars as a benchmark because it's a good global benchmark. It could be on Australian dollars or any currency. People say, well, gold went up, and then they say gold went down, but gold really didn't do anything. Gold is an element. It's atomic number 79. It's a very nice, very attractive metal. What changed was the dollar price. That's what people mean. When they say gold went up, they mean the dollar price went up. And if they say gold went down, they mean the dollar price went down. But what does it really mean? Is that telling you something about gold, or is it telling you something about the currency? And I would say when the dollar price of gold goes down, that means the dollar got stronger. Each dollar buys you a little more gold. And when the dollar price of gold goes up, I would say the dollar got weaker because each dollar buys you a little less gold. When you translate it into weight, I always think about gold by weight. That's why I keep talking about tons and so forth, metric tons. So fluctuations in the dollar price of gold tell you more about dollars than they do about gold. It tells you about the strong dollar and the weak dollar. So as the dollar price of gold goes up, what it means is that the dollar is getting weaker. Now, so if you want to know the dollar price of gold, just do a long-term forecast on the currency, and you'll get to the dollar price of gold very quickly. So when you say, is gold a good asset? Is it a good diversifier? Is the price going up in the long run? Great questions. And the way I think about it is, well, what's going to happen to the dollar in the long run, up or down? Well, what's the history of all central bank currencies? What's the history of all fiat currencies? What's the history of inflation? They all go down over time, not all at once. And that's another source of confusion because people look at, well, the dollar-euro cross rate, or they say euro to dollar cross rate, is the most heavily traded liquid, foreign exchange cross rate in the world by far. So, and in the past, I would say 2 months, a little more, the euro has fallen from about $1.20 to today it's about $1.13. That's a significant decline in the value of the euro and a significant increase in the value of the dollar. So a lot of times when people say the dollar is stronger or weaker, they're actually not thinking about gold along the ways we just discussed. They're thinking about some dollar index. But if you peel back the layers of the onion for every index, Dow Jones, Bloomberg, Fed, it's all basically the euro US dollar cross rate. So yeah, there's some Canadian, Australian, and yen and sterling. There's some other currencies in there, but the euro is the lion's share. So all these indices are really euro dollar cross rates. So when people say the dollar is stronger, well, it's another way of saying the euro is weaker. But currencies tend to trade within a range. They'll get here or they'll go here, but they're not like stocks. Major currencies, they don't go to zero. I mean, Zimbabwe, yeah, but the Australian dollar, euro, they're not going to zero. But they don't go to the moon the way Apple stock or Amazon does. They can be strong or weaker, but they tend to trade within a range, which makes them interesting to trade because you can spot those inflection points. So right now, when people talk about the strong dollar, they're really referring to the dollar value of a euro. But you could have a situation where gold is going much higher in dollar values, and that would be, as they say, the weak dollar. And yet the euro could be falling faster than the dollar. So people always look at the euro and they say strong dollar, weak dollar compared to the euro. My only advice is look at the dollar price of gold. Use that as your thermometer. Doctor walks into a room, they see the patient, they don't know anything. What's the first thing they do? They take your temperature. So if you want to put we don't use mercury thermometers anymore. They put a little X-ray thing on your head, but whatever it is. If you want to take the dollar's temperature, look at the dollar price of gold.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where do you start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.